All right. Well, good morning, everyone. Thomas Montgomery. It is a beautiful Wednesday morning, July 13th, 2022. We are nearly halfway through the month of July. I should say, we get together with our distribution partners most weekday mornings at this time, 8 o'clock Central, to train, to support, talk strategies, tips, techniques, and so forth. But where I was going with that is we're about halfway through the month, not quite. So this is a great time to pause and look, how are we doing individually? If you're a white label partner on the access to capital side, we need to have about 4 clients enrolled now that we're halfway through the month. If we're not at around 4, we need to figure out what we need to do differently for the second half of the month, right? Because our deal, our agreement as a white label partner on the access to capital side is to help at least 8 clients a month. So that's just a little mental note. If you're not on track, let's be proactive, figure out what we need to do differently to get on track. If you're a white label partner over on the 60-day credit suite, there we're helping at least 10 clients a month, so we should be at around 5. So it's okay, there's plenty of time to recover, but I just wanted to bring that to your attention. One other little side note before we get to our topic today. I was visiting with one of our white label partners yesterday, and the conversation was this, and I think it'll be helpful to you, and then we'll get on task. Talking about generating referrals. So not talking about attracting clients, but getting referral sources. And so the gentleman I was talking to yesterday is a white label partner on the credit suite side. So he's thinking about, how does he reach out to bankers and car dealerships and others to refer business to him. And the model that he and I vetted through yesterday, I wanted to share with you briefly. So what he's going to do is he's going to pay $100 to each referral source that sends him a referral that, of course, enrolls and pays, so he's never upside down. He's going to pay them via a gift card, like a Visa or MasterCard gift card. He's going to go hand deliver it to them on Friday. So he's targeting mainly auto dealerships. So let's just make it more specific. So he's going to target auto dealerships in his community. He wants them to know if they have clients that come in that can't get approved for auto financing or they're not getting preferred rates, that they can refer to him and he can set them up on the Credit Suite program. With that, he's going to pay them $100. The way that he'll pay them $100, as I stated, is by giving them a gift card. He's going to hand deliver those gift cards every Friday. So it's kind of like Pavlov's dog, if you remember that from college. So when the finance or the dealership representatives see the white label partner, it's positive, right? Oh, here he comes. He's bringing money. So he pays them on Fridays with gift cards, and then the referral source can then go use that $100 gift card on whatever it is that they want, gas for their car, taking mama out for dinner or whatever, drinks or whatever the referral source wants. But he's not only paying them $100 for each referral that of course converts, but he's doing it in a really explicit way that creates positive reinforcement. Because now what happens, let's say we've got Eric on the line here, and let's just pretend Eric is the finance manager of the local Toyota dealership. So I've let Eric know who I am. I'm role playing as a white label partner on the 60-day credit suite. So Eric knows who I am and that I have a really great, very legal, very effective way to help people boost their credit quickly that would allow them to get qualified for a car loan. Or if they get kind of a shitty car loan now, they can buy the car now. He can refer that person over. He makes $100. We get their credit score up, and then they can go back into the dealership, refinance the vehicle, and that makes Eric more money because dealerships make money each time they finance or refinance a vehicle. So with that, Eric knows that every Friday for his referrals this week, I'm going to be bringing him a gift card. Now, how much is on the gift card? Well, there's 2 strategies. You could give 1 gift card for every $100, and that would be best because it's more tangible, right? So if Eric referred me 4 people, I'm going over there and I'm handing Eric, in this role play, the finance manager of the auto dealership, 4 MasterCard gift cards. Here you go, Eric. But let's say that Eric slipped up. He didn't think about me. He didn't refer anybody this past week. I don't show up. And so that's kind of sad to Eric, right? Because man, he's used to that positive reinforcement of getting paid. So the point before I get into the agenda is you definitely want to have referral partners, other people that's out in the community, that's thinking about you, that's referring to you, and they have an economic incentive. How you want to pay them is up to you. But like we're talking about with the Eric model, if they're local where you can get in front of them, best practice, you don't have to do it this way, but best practice would pay them by gift card, not by Zelle or Venmo or Cash App, which is more distant and less personal, and bring them a $100 gift card for every referral that converted, that enrolled, so you're never upside down, and hand deliver that on a consistent basis. So they're expecting you. Because now all of a sudden they're thinking, man, I could use some extra money this weekend. I should have really referred someone over. So hopefully that's helpful. If you have any feedback on that, let me know. But that's just an example of how to get more business by using referrals. Because no matter how great of a market, we've got some awesome people on the webinar. We got Alfred. He's just a lockbox of information. You got Charles. You've got Erica, wonderful, talented people. But I'll tell you what, Alfred, Charles, Erica, none of you can accomplish your potential on your own. You have, whether it be on the access to capital side or the 60-day credit suite, whichever white label partnership role you have, there's just so many other people that have relationships that if they had knowledge of how you help people and an economic incentive to refer to you, they would. And use Joseph again. Joseph's a big time realtor in Northwest Arkansas. Do you think he's making as much money through our program by just doing grassroots marketing? No. Joseph knows he wants every realtor in the community to know that he's the go-to resource. Even though they may be a competitor of his in terms of selling real estate, he has a solution to their problem. What do we do with people that don't qualify? Sergio is awesome. He goes to bankers and introduces himself, gives his card to bankers, and then lets the bankers know, hey, if you have anyone that comes in that qualifies for, or I'm sorry, that applies for a business loan but doesn't get approved, refer them to me. Now, some referral sources can accept the gift cards, some can't. One way to circumvent it, though, is take people out to lunch. So even let's say the banker says, oh, I appreciate it. I definitely have some people that are turn downs. I could refer to you. I can't accept any compensation. It's against Bank of America's rules. Great. May I take you out to lunch? And take people, these key referral sources, out to lunch on a regular basis. The more referrals, the more regular, right? You got to eat anyway. It's a business expense. Okay, so that was a tangent as far as some creative ways, but effective ways to create more referral flow so your numbers are higher. Now, one closing comment on that. A pessimist would say, well, wait. If I'm paying out $100 for every time someone refers to me, that's cutting into my profit margin, Tom. That's a bad idea. Well, that's the wrong way to think about it. You got to build it into your deal. You got to build it into your pricing. Let's go back to Eric at the car dealership. Car dealerships, when they give away free window tint, do you think it's usually really free? Or do you think that they built it in to the price? So you control the pricing as a white label partner, whether it be the access to capital or 60-day credit sweep side. So you should build in some marketing allowance, right? Okay, enough with that. We're going to get over to our training today, which I'm very excited about. So we get together once a day, 8 o'clock Central. Today, we're going to take a few minutes to talk about and clarify the incredible value proposition of how we assist clients with accessing business credit, guaranteed minimum $10,000 in the 28 days, and the free 4-week funding program. So stepping back, business credit and business funding is huge, right? That's ultimately what we want to do, is help clients be strong enough on paper that they can get the funding that they need. And we want to leverage the business as much as possible and minimize the use of personal credit. Just kind of separate the two as much as possible. But most of these businesses that you and I come in contact with, that work with, that they have not yet established themselves as credible enough on paper. And there are companies that will charge, and I'm not saying it negatively, but there are companies that will charge thousands of dollars to do what you and I do for them for free, for free. And so this is not new. It's not even a change. It's not even an enhancement. This has always been built into the 4-week curriculum. We'll go through this, of course, but I'm thinking that some of you, based upon the feedback I'm getting, you're maybe oblivious to that. And I'll take responsibility. It must be my fault. It couldn't be yours. But if you've not gone through the free 4-week funding program yourself and gone through the modules, then that's a big part of the problem, right? You don't even have a firsthand understanding. You go through it, it's free, and you understand it. This is all part of Module 2. This has been part of Module 2 since day one. So again, I'm not sharing with you something new or something that's different or something that's changed. It's been there. But if you're not aware that it's there, then you're probably improperly prepared to explain the value proposition, because this is one angle, right? There's different marketing angles of why you could encourage someone to enroll in the free 4-week funding program. Of course, we provide you a free landing page to make it simple. But what are some of the top bullets of why someone would want to enroll in the free 4-week funding program? Well, number one, it's free. That's a pretty good start. Number two, we guarantee them at least $10,000 by going through it, and that's part of the written guarantee. So we jokingly say it's since the grant covers the $2,500, they don't have to pay it to enroll. And then also we kind of jokingly say we pay them to participate, because they're going to get at least $10,000 by going through it. So that's a big selling point. The fact that we're going to work with them and help them build their financial literacy and help them build a lender compliant loan package and help them become credible enough to get the funding that they want and need to start to grow, to reach their potential. I mean, the 4-week funding program is an incredible proposition. This is one part of it that I'm bringing your attention to. Not a change, not an enhancement, just trying to bring your attention to it if you didn't know. So now you might look at this and say, hey, I've referred clients before and they don't know anything about this. Well, if you're a white label partner and you're doing the mentoring, I think it kind of comes back on you, because if you look at the instructor's guide, this is in it. And if you look at the participant's guide for Module 2, this is in it. So this is, again, not a change, not an enhancement, just trying to bring to your attention the strong value proposition. So what do we cover about business credit for every participant that goes through the free 4-week funding program? Well, we teach them about business credit reporting. What are business credit reports? Personal versus business credit reports. What's the difference? Major players in business reporting, the whole Dun & Bradstreet discussion, and then helping them understand where business credit reports come from. I know it's difficult, but you know so much, and it's easy for you to think that everyone's as smart as you. But unfortunately, most people are not financially literate. They don't know what you know. And so that's what we want to do is enhance their knowledge, build their loan package, and help them get credible enough for funding. And part of getting credible enough for funding is building their business credit worthiness. So business credit reporting is covered in Module 2. These are specific bullets from what is covered in Module 2. Then we get into the regulation of business credit. We teach them about the Equal Credit Opportunity Act. We teach them about how business credit scores work. We show them how to check their business credit report. The last thing that you and I want is someone that does not know what their business credit score is, because that is showing a disconnect. It's like, okay, you and I, let's take a trip to Miami, but we don't know which highways to take if we're driving to get there. That's terrible, right? It's going to be a much longer, frustrating trip. So we actually go through an exercise with them. And again, this is not new. This is not a change. This has always been there. But if you're not aware of it, you will be now. So we have an exercise that's called the Business Credit Report Checklist. And I think I'm pulling from memory. I think it's on around page 29. Don't hold me to that, but around page 29 in the participant guide. So we teach them about how to set up their business properly with the business credit bureaus, including their business name, their business address. Now, back in module 1, we talked to them about the 27 mistakes and the importance of having a true commercial address. We can provide them a commercial address if they don't have one. But anyway, this is building off module 1. We also teach them in module 1 about the importance of having a business phone number that's not a cell phone number. And so that's part of the proper setup. So let me step back and make sure we're on the same page. I'm not going through some bullshit list just to make you look smart or me look smart. We're going through what it takes for a business to look credible in the eyes of a business or business credit report and any user of those business credit reports. So this is truth. This is not what do you think, and it doesn't matter what you think, doesn't matter what I think. This is truth. This is factual. So the setup of a business in Dun & Bradstreet, for example, if the name is not set up correctly, that's bad. And we need to check to make sure it's correct. If their business address isn't correct, that's bad. We need to correct it and make sure it's correct. What's the implication of not making sure that it's correct? Then we're less likely to get funded. We're going to have probably less credibility, a lower business credit score, lower borrowing capacity. This is the epicenter. This is the core of getting the business to look good on paper. Now, is there more to having a business credible than this? Yes, but this is at the core of it. And this is part of this curriculum, this award-winning curriculum that we provide for free, that you can refer people in for free and then make money as we flip over into the funding process. So they need to have a business phone number, check their business website, their DUNS number, the industry classification code. A lot of times this is wrong, and that can make a difference in fundability. What type of business, state of incorporation, when was it incorporated, what's the ownership structure, name of the owners, and percentages. So this is all part of a profile, for instance, within Dun & Bradstreet. We are foolish. We're wrong to think, oh, it's all fine. Someone else is taking care of it. It happens naturally, organically. No, this is going to be just a big mess. Almost every case, it's almost always a big mess, and it's inaccurate and incomplete. So the business doesn't look as credible on paper. You might say, well, how does that happen? How does it get all effed up? Well, what happens, let's again use Dun & Bradstreet, they know when a new business has been formed because they access public records, just like you should be, right? You should be following every new LLC, C Corp, S Corp that's formed because they're a great prospect for the Access to Capital program, right? But regardless of that, Dun & Bradstreet then records an entry, but they're not getting full information. They're getting just a little bit of information. And so there's going to be a lot of blanks and often a lot of inaccuracies. So this is so much different than personal credit. In general, personal credit will be accurate. It's kind of the exception when it's not accurate. Business credit, the opposite. It's almost always effed up to begin with. So we have to clean it up so we look good to go to funding. We also want the client to look at their business credit history. Now, again, be prepared. You're going to have a lot of early stage businesses and they want to play the ignorance card. Oh, this doesn't apply to me. I'm a new business. I'm a startup. You know, you hear that bullshit about balance sheets all the time. Oh, I don't have a balance sheet. I don't need one because I'm a new business. You know, they're stamping financial illiteracy on their head. Well, sure, you may be a new business and maybe you don't have any business credit history. We still need to make sure that everything's set up correctly. And let's go ahead and look to see if there is anything on your business credit report. Hopefully you're right. Hopefully there's nothing there, nothing that's wrong. Well, I guess I shouldn't say that. Hopefully there's lots of great trade lines, but in this case, if it's a brand new business, probably not, but we want to check. And then we also want to check for public records in terms of bankruptcies, lawsuits, liens, judgments, and records. So this is what is involved with this exercise that is part of and always has been part of Module 2, part of the free 4-week funding program. This is really valuable. This alone is a couple $1,000 value that you and I are taking out to the marketplace for free to these individuals. Now, are they engaged? Are they going through it? Are they doing it? No, that's where individual diligence varies, of course, but it's part of the curriculum. And then lastly, we help them understand why they should establish business credit, how to do it. And of course, that's what ultimately we're going to do. So there's almost, we'll break it into 3 steps. Step 1 is we need, and I'll make it a little smaller. We need to help these folks be aware of the importance of business credit. So if they enroll in the free 4-week funding program, then that's part of the process. Secondly, we need to help them make sure that their setup is correct, and that's included in Module 2. And then lastly, we want to help them build their business credit history. And we promise to do that. We guarantee to do that in the free 4-week funding program. We promise to get them at least $10,000 while they're going through the 4-week process with no personal guarantees, no use of personal credit. So with that being said, who has questions, comments, concerns on what we've covered today? I just wanted to give you a quick review of part of the value proposition of Module 2. So let me give you a moment to type in any questions or comments you have, and we'll go through those. All right, so just type any questions or comments. Jan and Lynette have their hands up. Just go ahead and type those questions into it's like a chat box of Zoom. All right, so Timothy is asking about this guarantee, and so I appreciate that. So what we're doing in the free 4-week funding program is specifically going through 4 modules, and in Module 2, this is part of Module 2. It's not the entirety of Module 2. And then they are instructed to complete this exercise so they can check on these items and correct it if it's not correct. Once they've confirmed that this is correct and the profile is created accurately, then we can move forward and we start helping them add trade lines. And that's what we do, and we can help them add trade lines. Now, depending upon their circumstances, it could be different trade lines, but what a trade line means is some extension of credit, something that they can literally use for their business that reports under their EIN. Victor's asking about instructor's guides. So on the white label page, you're going to find Victor, you're going to find the YouTube training library, you're going to find the submission form, you're going to find the link to create your own agreement, because as a white label partner, you contract with the client directly. You're going to find a link to the instructor's guides, a link to the participant guides. You're going to see each of the training videos. You're going to see the deliverables. It's all there. So anyone, and I'm not harping on Victor, Victor's been with us a long time, but anyone that's not familiar with the white label page on iimfl.org, then there's a massive disconnect, because that's the epicenter of where your resources are. We're very, very transparent. And so we don't have some passwords. It's not some secret website. It's there for the world to see. So many of you, before you decided to become a white label partner, you went over and went through it and said, yeah, this is the real deal. And then you signed up. So we're very transparent. And the answer, Victor, is it's all on the white label page. Has been and always will be, I suppose. All right, so Jan's asking about this. Do we charge for these trade lines? No. So a bit of history. This used to be a curriculum that myself and a couple others taught at a college. It was an entrepreneurial class. It was 12 weeks long. To be able to go through this, they had to apply to college, be approved to college, accepted to college. They had to pay the 3 credit hours tuition. They had to register for the class. Maybe I said that. They had to buy the book. They had to attend the class. We went through a 12-week program. So we taught future entrepreneurs what now is part of the 501c3. So once we applied for the grant, got the grant, we pulled it out of the college, plugged it into the 501c3, and then we've been offering it as the free 4-week funding program, which it is free. It's a $2,500 value. This is module 2 of the 4. So the grant covers it. So, and now we are expecting the participants to fully participate, of course, but specifically, no, Jan, we do not charge for this. It's part of the free 4-week funding program. If you go to 4weekfunding.org, well, there it is. If you go here, let's cancel that. If you go to .org, you can get signed up as a referral partner. If you want to be a white label partner, then it's 4weekfunding.com. But 4weekfunding.com for whitelabelpartners.org is where you get set up as a referral partner, get your free landing page. All right, Myra asked, as a white label partner, can you charge for the funding program? Sort of, it would be a different campaign. If your goal is to charge for it, then I wouldn't bring them through the free 4-week funding program, because as the name suggests, it's free. But instead, as a white label partner, you'll bring them in directly into the Access to Capital program. If you bring them at Maya into the Access to Capital program, you're going to be paid, you will be paid $2,500 to take them through this curriculum, the 4 weeks. Not bad, right? And then you'll be paid a percentage of the capital raise that the clients are guaranteed a minimum of 100,000, but you choose the performance fee. Most of you are choosing around 15% now with the current market conditions. So yes, Maya, you can be paid generously, $2,500 to take them through the curriculum, plus whatever performance fee, around 15,000 on the back end. And so that's, if my math is correct, gross income, that's about $17,500 per client to take them through it. And even then they have no upfront cost, because the $2,500 that they're paying you is finance. It's built into the package, kind of like buying or selling a home. You don't have to pay the real estate agent separately. It comes out of the deal. Okay, great questions. So I'm open for any other questions that you have, but I'll summarize while we're waiting for any others to pop up. I mean, this is a big deal. What you and I are doing is needed. It's credible. It's valuable. This is embedded into the curriculum. You know, we could spend each day digging into these nuggets of the value of what we're doing. But what would be a lot more efficient is if you just went through it. Go to 4weekfunding.org, not .com, and sign up for free and go through if you want. I'm not trying to solicit you to do it, but I'm saying if you want to see all the nuggets and go through it and understand it, then go through it, right? Otherwise, periodically, we'll bring something to your attention like we're doing today, just because I feel like there's a disconnect. It's like, I think a lot of we've got thousands and thousands and thousands of distribution partners, wonderful, smart people, successful people. But I think sometimes they don't really some of them don't really understand how valuable it is that we're offering. This here could be sold on a standalone basis for a lot of money, and it's provided for free. It's part of the free 4-week funding program. Anyone else have any questions? Okay, so Dave says he's been submitting people, so great. So as you submit people into, so when you go to 4weekfunding.org, not .com, down at the bottom of the page, you can click the little button and say, yep, I want to be a referral partner. Great. So then the system will set you up with a link, and you'll have for free. You'll have your own landing page, your own URL. And then just like Dave has done, then you can refer people to it. And then you're notified, right? It's an automated system. Scott Stroud, our Chief Marketing Officer, has built this, and it's a very, very good system. So what will happen is you refer people in to your link that looks just like 4weekfunding.org. And so then you're notified when they filled out the first page, which is kind of, now they're in the system. They're a lead, but they've not signed up yet. And then it'll also notify you when they've actually signed up. In other words, they've agreed to the terms and conditions. At that point, then what you know is they're going through the 4-week process. So that's what happens. It's 4 modules. They advance once a week. They're assigned a mentor. So if you're feeding them through this, you don't have to mentor them. Our staff will mentor them. So either myself or one of the other mentors will be assigned. We'll work with them and go through it. They'll have the modules sent to them automatically each week, and then we'll have weekly calls if they want weekly calls. They're encouraged to schedule weekly calls with their mentor. In the academic world, we call this hybrid learning. So in other words, they have access to the materials, the curriculum, 24 hours a day, 7 days a week, but then they have one-on-one time with the professor, the mentor, the instructor, whatever you want to say, at a scheduled time. So hybrid learning. And so what happens then is once they get through, and we changed the system a bit, Dave, but once they get through the 4 weeks, then the algorithm is now they're sent automatically the prompting to complete the funding proposal, because they should be ready for funding. If they've done what they were supposed to have done during the 4 weeks, then we are ready to go to funding after the 28th day. So we call that stage 5 for whatever you care about that. But once they get to stage 5, they automatically are sent the funding proposal, and they're encouraged to complete that so we can go to funding. There's 2 significant differences. If you're just a referral partner, all you do is refer them to your link that's going to look just like 4weekfunding.org, and then you're done, and you'll be paid 5% of the client's capital raise. You do nothing else but get paid once you submit a bid. No other work involved. If instead you're a white label partner and you're using what we call the hybrid model, then it starts the same. You're feeding them into your link that looks just like 4weekfunding.org, but then you interact with them at some point, usually week 2, and then follow up with them, and we'll just role play. So we'll pick on Sorrel. Sorrel's on the line. So then let's say I referred Sorrel into the free 4-week funding program. Sorrel's going through it. I give Sorrel a call at week 2 and say, hey, Sorrel, how's it going? Are you happy? Are you satisfied with going through the free 4-week funding program? And most likely the client's going to say, heck yeah, man, this is great. You know, I'm working on my business plan. I'm building my business credit. It is great. It is great. And I'd say, well, Sorrel, did you know that we can go ahead and get your first tranche of financing right now? You don't even have to wait until the end of the 28 days. If you would like, we can go ahead and get you some funding offers now. Would that be helpful? What do you think Sorrel's going to say? 9 out of 10 times, any client's going to say, well, sure, yeah, let's go ahead and see what offers I qualify for now while we're still going through it. So then I, as a white label partner, would send Sorrel, I'd send the client my access to capital agreement, which each of you have. And then you will get them under contract. You'll submit them on the white label client submission form, also on the white label page. We'll get them some funding offers. They get some cash in their pocket, and you're paid the $2,500 now. So going back to Maya's question, Maya was, well, can we charge for this, the free 4-week funding program? And if I were you, Maya, I would consistently use the hybrid model, which I described, which does get you paid, but you approach it in 2 steps. Step 1 is refer them into the free 4-week funding program, leave the mentoring to us so you're not burdened with it. Flip them over around week 2, just like we role played in this discussion, and then with Sorrel as an example, and then they're going to funding. You're getting $2,500 up front. You're getting the performance fee off the back end, and so yes, you're paid generously. But with that being said, you can skip the free 4-week funding program and just take them directly into the access to capital as a white label partner, if you prefer. All right, well, we're running a bit long, so let's just wrap this up. So my goal today was to make sure that you understand how we help clients build business credit. And not in a superficial way, not like we just kind of reference it. We have a complete curriculum that we take them through, and this is all built in to module 2. You'll see this in your instructor's guide. You'll see this in the participant guide. You'll see this on the on-demand training video. It's part of what we do. Now, how involved the client gets is somewhat up to their discretion, But the bottom line is this is so valuable. How could you not be successful in finding small businesses that want and need capital? You invite them to participate in the free 4-week funding program. You refer them to your landing page, which will look like 4weekfunding.org, and then they get started. Our team does all the work and you get paid. I don't know how it gets any better than that. I don't. All right. Well, I appreciate everyone's time. We will be back tomorrow morning with the next topic of the day. Let us know if we can be of any assistance to you. If you're not signed up as a white label partner yet, I encourage you to do it. You can do it free and easy on 4weekfunding.com, and we'll see you back tomorrow. Bye-bye.